All right, Matty, welcome back to the Ask Matty Show. Matty, how are you feeling?
I'm doing excellent. It is Monday, new week, new opportunity. Overall, feeling really amped.
I'm ready to get the show going, Matty. We have a lot to talk about today. A lot of good questions from the team today that I am bringing to you. XRP, the future of crypto, the future of DeFi, all in today's show. So we have a banger of a show today, team. But before we get into that, become a Crypto Charged member. We are from cryptocharged.com. We do education on the daily there. So click the link in the pinned comment below. Join us over there with the rest of our community. Also shop at cryptocharged.com. Get some swag. And finally, team, please subscribe to this channel. It greatly helps us grow. But on today's show, team, your comments, your questions, your hot takes, we're about to get into it. Matty, are you ready?
Let's do this thing, baby.
Alex Hicks says, what is XRP?
XRP is my only child.
Yeah.
No, XRP, if we're going to be kind of, simple about this, kind of take it back. The best way to describe XRP is a bridge currency. And, we look at the problem that XRP is addressing. And that primarily is cross-border payments and remittance payments. So there's a need for, first of all, retail remittance payments. So when people live in one country and they need to send money back to another country, to either their families or for whatever reason they need to send money back to another country, that's one retail usage of remittance monies. And of course, there's then the institutional remittance and cross-border payments. And that's really what we're really addressing here. Of course, retail makes up a good portion of that, but these bank-to-bank transfers, also when we move money from one bank to another bank and maybe the other bank is in a different receiving currency. There's a lot of friction within that system where there's a lot of steps that happen in between. There's sometimes charter banks that are placed in between to help kind of alleviate some of the friction that is not available when you do a bank-to-bank transfer. And then you also have the FX or the foreign exchange markets in the middle of that, like I said, because sometimes you're going from euros to dollars, sometimes you're going euros to pesos, pesos to dollars, right? There's a lot of different solutions there that might need to take place, right? When you're allowing something like XRP to come into play here, where instead of a remittance payment taking somewhere upwards of 3 days to complete, just depending on, again, the institutions that are at play here, what countries it's moving to. Some of those countries don't have as many available markets to them, right? Those can take several days. From a consumer standpoint, that can sometimes take upwards of 10 to 20% of the total amount of money you're sending. And again, these people take advantage of them because they know that they can charge it, and it's really the only way to efficiently get money back to loved ones back home, right? Other than risking, mailing physical cash back home. That's obviously not a good idea and not very efficient. So we have all these problems out there, right? And we have this old legacy system that really hasn't changed a whole lot. We're still using Swift messaging as kind of that primary tool to move money around the world. When you have a bridge currency like XRP, what you're basically doing is you're circumventing that entire process. So what Ripple, the company, has done is created something called ODL, or on-demand liquidity corridors. With these corridors, you can have bank-to-bank transfers that are done in under 3 seconds. And that can also be done swapping and receiving in like currency, right? So I can send dollars and you can receive in euro. I could send pesos, you could receive in yen, right? It really does not matter. And of course, we can send XRP from person to person. We can do decentralized peer-to-peer transactions, and we can use XRP in its rawest form. But when we look at the higher use case of XRP, it is a bridge currency for banks around the world. Now, again, I've iterated this many times. I don't think that the XRP ledger and XRP itself is the end all be all for satiating every transaction that we have in the world, right? I think there's lots of tools and mediums for this, but I do think that the XRP ledger is capable of facilitating the settlement of not only currencies, but other securities, right? So we could be looking at things like stocks, we could be looking at things like metals, we could be looking at things like oil, right? All of those things could be settled on the XRP ledger. And there's a really, really great in-depth speech that David Schwartz, co-creator of the XRP ledger, talks about this when he talks about automated market makers, when he talks about, how you can, settle a variety of tangible and non-tangible things on the XRP ledger. It's really, really interesting. We'll make sure we link that below for you guys. But that's kind of an overview of, how the XRP ledger works and the value of the XRP asset itself.
Check in with Mark. 437 says, what good and bad things might happen when regular money places start using crypto more?
So I wouldn't say there's necessarily like a bad side to this. I would say the bad side would be more of the individuals who are not really comfortable with this bridge or this transition into more of a digitally based society. We already have people who are very resistant to that now, right? Like a lot of baseball stadiums, festivals, places where, they used to accept cash are just going completely cashless. They're good with digital payments. I've been good with digital payments for a very long time now. It's more efficient, easier to keep your accounting straight. Obviously not having to keep your physical money around, right? Like if you get your phone stolen, boohoo, right? It's locked. you get a new phone, none of your money gets stolen, right? There's a lot of benefits to not having this paper money, right? And there really was a need for paper money prior to this because we didn't have the technology to facilitate those payments easily, right? I'm sure that 90% of you guys, when you go to check out somewhere, you look at your phone, you double click for Face ID and you tap, right? The convenience is just unmatched, right? You take one device with you, it's got everything on it. What I've iterated many times when I'm talking about the point of sale or POS, right? When you go up to a Walmart or a gas station or whatever, and you want to go pay for something, the average consumer is not going to be aware that there's going to be crypto used in the background, right? So you could still be using Bank of America, Wells Fargo, Chase, right? But all of these banks can be leveraging these DLT or distributed ledger technology solutions, these blockchain solutions, these crypto assets as the underlying assets, right? We just discussed XRP and how we're bridging currencies, right? But if I'm sending money from Bank of America to your Chase account and you're located, somewhere else in the world and I'm sending it to you, you're not going to necessarily know that XRP is being used in the background or that you're using Ripple's ODL corridors. It's a background process. In fact, I would say that most people are completely unaware of the process that's happening now when you go to check out, right? At the end of the day, all you care about is you see approved and that you can walk away with your goods or services, right? So I think that there's going to be a good portion of people that are resistant to just the digital changes at all. I don't think they care necessarily that it's a crypto specific change. I'm sure there's some old heads out there that really hate that. It's really going to be more of the friction of just getting people under the idea of like, we're not using cash anymore. In fact, we're strictly using devices. We're not issuing plastic cards anymore. And I think that's really when the change starts to happen. But I don't think there's necessarily big drawbacks to it. I just think we get higher efficiency, less errors, better accounting, all that.
Matty, how hard is it for it to be more focused on crypto at point of sale?
It's actually not difficult at all because when you think about the technology that's inside of these readers, and some of these readers are really old. I mean, right? If you think about like some of the ones you go to your gas station, I want to say the one by my liquor store by my house is probably 25 years old. It is not fancy. It is not new. And the reason that it's able to accept Apple Pay without getting a new device is it's just a software update. When you have RFID, right, it's just the ability to do contactless pay. So if I have a digital crypto wallet and I have a store around me that would rather accept XRP directly to, circumvent the credit card companies, circumvent the fees, and for us to just settle for a fraction of a penny right there on the spot instantaneously, right? That upgrade requires just a software upgrade, right? So if I can add a crypto wallet to my Apple Wallet, which should be happening, I would imagine in the 2 years or less from now, I should be able to pay with crypto at any point of sale that has just made the simple software upgrade to recognize that and reach out to the payment network and make the settlement, right? Now, of course, there's going to be bumps along the road. It's not going to be perfect right away. Some of these, POSs are going to need to get upgraded at some point in the future. But right now, it is possible to do an upgrade with an RFID enabled machine. And if that wallet were RFID capable, you would be able to pay at point of sale.
Love it. Michael B. Thompson 1 says, how will DeFi change regular banks in the future? Big questions today, Matty.
Yeah,
big questions.
These are big questions, but I like it. And I really do love kind of coming back to the fundamentals of digital assets and crypto and, how this all is interwoven with the legacy system. And it is, good things to contemplate. And, we can only take what we have now and we can kind of project it against first of all, our existing issues and problems. And then we can look at, the future of DeFi, right? And I think that DeFi is here to stay. I'll say that first and foremost. I don't think DeFi is going anywhere. I do think that DeFi is not going to exist in its current form today 5 or 10 years from now. And the reason for that is there's too many people who get hurt right now in DeFi because of bad and nefarious actors, right? So there's people in DeFi that create these LPs or liquidity pools. They tell you, hey, you contribute both equal portions of USDC, and let's just pick an example, Phantom. I'm not saying anything bad about Phantom. I'm just giving you guys an example. You contribute equal parts of this and we'll pay you rewards. And those rewards will be paid not in Phantom or USDC, but they'll be paid in chicken token, right? So you receive these chicken tokens for leaving them in the pool and it's different lockup periods, whatever, right? You can set the parameters just like you would with a regular loan. If you were to be contributing your money to, for example, a treasury bond, right? You'd say, hey, take my money. You give me a 5% return in 6 months, 3 months, 1 year, 5 years, right? There's a lot of different terms you can set up there. So without getting too far into the weeds on this, there is nobody right now who can help you recover your money if it turns out that chicken coin was a scam, or if that DeFi pool gets hacked and those tokens get stolen. There's nobody there to help you recover those tokens. And I think that those are some of the barriers right now that are keeping DeFi from really growing into the space that I think it's going to be, grow into. Now, when you look at the growth of the DeFi space, even from like 2017, 2018 to current, it's exponential. The really, really huge growth in the DeFi space. I mean, we've gone from a few $1 million up to a multi-billion-dollar industry when we're looking at strictly just DeFi alone. I think that you're still going to see a lot of the same legacy products offered. For example, and let's just take a step back here a little bit just to understand that banks are not necessarily the ones doing the lending. When you go to get a home loan, for example, through Chase or Wells Fargo or whatever bank, credit union you enjoy, you are not actually paying that bank back. What happens is almost immediately after the loan has been approved and the loan is all said and done, they sell that to a secondary pool. So your loan is almost immediately sold off to another investor, and that is what creates liquidity in the housing market, right? And we obviously see different cycles of this based on how the Federal Reserve is approaching interest rates, whether they're tightening or they're easing. We'll see, of course, rates go up or down, right? And that secondary pool is a big reason for that. Now, if you're able to leverage some of the tools that we have in DeFi now, and you're able to make those markets more liquid, that secondary market more liquid, and you have people who are not, just accredited investors who have millions or billions of dollars to blow on, real estate portfolios, and some of them do well, some of them do bad. You're able to tokenize these and break these down into smaller shares, and I'm able to buy NFTs that represent portions of mortgage securities in DeFi pools, right? That opens up exposure to me that I would never previously have exposure to. Now, again, we're talking about one very specific example. There's a lot of things that DeFi can change. We can tokenize just about any tangible or non-tangible item. We can create pools for those, sell those to investors in any fractions that we want, change the terms up. You could sell your NFT that represents a contract term to another person early and exit your position, right? You're creating a lot of opportunity through making illiquid assets more liquid. And I know we covered a lot of technical terms there, but those are just some of the things that I consider when we think about DeFi, the future, and the existing banking system.
Yeah, rewatch that back. That was a lot of good stuff right there, man. I like that. What rules, General Max 212 says, what rules might be changed in 2024 that could affect how crypto works?
It's a big question, right? And how are we approaching this, right? From a regulatory standpoint, right? What are we thinking about here? And are we talking specifically about the United States? Because I think that's one of the things that people kind of start to mix up is hey, U.S. policy about crypto is this, so this applies to all of crypto as a whole. You had to remember that a lot of crypto is truly decentralized, and that these assets can be transferred to non-custodial wallets, right? So even though the government may want us to interact, one particular government may want us to interact with assets in a certain way, and they want us to declare our holdings even if they're in cold storage or whatever, right? And there's a whole bill out there right now going around about that. There's lots of other governments that might regulate it very differently, right? And it becomes a little muddy because crypto can be transferred without the use of an exchange once you own it. So what could change? Anything and everything could change. What I'm hoping for in 2024 is that we get at least a comprehensive regulatory framework here in the United States. That would do a few things for us. That would, one, allow exchanges to feel comfortable operating and knowing exactly how and what assets they can and how they should be offering those assets, right? That's going to clear up a whole lot. If we can regulate stable coins and allow banks to start issuing stable coins, that brings a whole new group of people back into the, or introduces a whole new group of people into the crypto ecosystem, and they feel comfortable with it because they feel that those stable coins are being backed one for one. Those attestation reports are as good as gold, and they're the same as your US dollar, even though it's, in the background being depreciated, you're just, accepting it because the piece of paper still says one, but right, that same $1 10 years ago was worth a lot more than it is today. So those are probably two of the biggest things that I think that we really need to get underhand here. And then we're probably going to see some fine tuning as well with, taxation when it comes to crypto, right? That's something we're still ironing out. We just recently had a crypto tax expert on our show. He even talked about staking rewards and how staking rewards are going to be taxed upon receiving them, and kind of how we go about that fair value of them, especially if you're in some micro caps where you get that fair value drop. And for example, the initial price is $500 and then within 10 minutes it goes down to $2, right? What's that fair value? So there's definitely still a long road ahead of us. I don't think that, when we get into this bull run that it fixes everything and that crypto is, easy peasy moving forward and smooth sailing. This is a very complex technology that not even a lot of people in Congress or regulators understand right now. So it's a lot for them to digest. You look at simple topics that they understand well and how long it takes them to fully get those right. I just wouldn't expect crypto to be this perfect integrated concept into our society for probably 10 plus years, if I'm just being quite frank.
Again, I had him twice. Alex Hicks says, what's your target to sell Zcash? That was a great question.
100K or bust, right? No. Wow. So we can actually just take a quick look at the Zcash chart here together, just to reiterate. I've done this before for you guys, but I'm going to show you guys where my head's at. Let's go ahead and just turn off the lights with all our moving averages here. Let's come out to a 2-week chart just so we can get all the price history in here. And I'm just going to make sure you guys fully understand the trade idea here. So first of all, the main reason I'm in Zcash right now is not only because it's a Dino coin, not only because it's technically in a structure that looks very similar to the XRP chart, which I've shown on stream many times, showing how this fractal is basically like a drawn out fractal that we saw from XRP from 2013 to 2017 prior to that huge breakout. But what I'm really, really looking for here is going to be, first of all, not using this wick up here. So there's this wick in 2016 showing the all-time high around $2,600. I'm actually going to be using the candle body closes after we got this retrace in here, even though we could technically use $945. I'd prefer to use $800. It's really a kind of a negligible difference in the grand scheme of things when we're looking at targets, but I just see a lot more volume being done over in these areas. So let's go where this candle body close was, and then we're going to look at a couple different ranges. So first and foremost, we can go to that 2018 low where the wick is there. I do have a second wick here confirming that this is the bottom. So we'll just go with $17 as the bottom. Gives us two pretty good areas of interest down here. We found very strong bounces. And again, the reason that I think that this is technically setting up a lot like XRP is you can see that we had we're going to ignore all of this illiquidity because that's what this is over here. This means that it launched and there were no buyers here on the Bitfinex chart. We get this retrace and then we pull back down, double bottom, and here find a really strong bottom. When we come in, we retrace for a 382 or 38.2% of the range that we selected here. XRP did a 38.2% retrace, crashed, reaccumulated, and then went in for like a 63,000% pump. Now, am I promising you guys that Zcash will do a 63,000% pump in a matter of, 200 or 300 days? No, I can't promise you that. But what can we do? We can look towards our Fibonacci extensions. And that tells us first and foremost that the 1.618 right around $1,200 or $1,300 would be our first target. And we'd be looking to scale out all the way up here towards upwards of $3,300. Now, of course, we have other extensions up here that show for long periods of time. Could Zcash reach, 5 or 6 figures? Yeah, sure it could. But I'm looking at this cycle by cycle and I don't want to get greedy here. So even if I were to look at current market price, which is under $30 right now, we were looking at that first target, right? We've got a 42x on our hands up to the 1.618. A full extension will put us here over a 100x. So again, many of you guys have asked, why are you not DCAing into XRP right now? Why are you not buying any XRP? You've told me what an enormously big opportunity this is. It's because of these technical rules. So here on Zcash, I'm making sure that because we're below that target, I'm accumulating here and the opportunity is there upwards of 40 to 100x. Casper, same opportunity, right? Upwards of 40 to 100x because of where we are price-wise. XRP has exponentially less opportunity right now because we broke over such major resistance and we haven't really come back to retest those levels. Once we re-enter that zone, I'll be very interested in adding more XRP. But right now, Zcash is one of my prime DCAs for this exact reason.
Great show today. A lot of good stuff here. Team, please subscribe to this YouTube channel. It greatly helps us. Catch us at cryptocharge.com. And until next time, see ya.